Good morning, my name is Jackie and welcome to Coffee with Jackie series. I trade for a living and trading is my passion and my lifestyle comes directly from it. I'm also a proud founder of Nibiru Trading Zone, a free-to-join community made for traders and by traders to increase their trading skills. My trading background is retail-based, meaning I had to learn everything in my own way, in a hard way, losing a lot of money and nerves and also time. But most importantly, everything I'm talking about in this series is based on my own experience, on my own learning, and everything I had to suffer to become what I call right now a consistent and profitable trader, meaning I earn money on the market in a constant way, and my equity curve is sloping up. I hope you will enjoy this video as much as I enjoyed making it for you. Let me take a sip of my coffee. First water. And then main coffee. And let's start. This episode called Sins of the Traders will be obviously about sins of us gamblers calling ourselves traders. I selected 3 of them which in my opinion are the most important and most destructive for our accounts and are blocking us from entering the state of being a consistent trader, which means consistent, meaning making money over time, not on a single transaction, but over time. And everybody who wants to live from trading, who wants to be a professional trader, knows the feeling and knows the struggles he had or still has to be one. I selected 3 of them. And first of them is the most common and most known, it's FOMO, fear of missing out. This is the state of the mind when we want to enter a trade because market is moving up or down. And more violently it's moving, more we want to join the movement to earn money on it. It is destructive because what we are doing, we're jumping the gun. We don't have a proper plan in place. And we're just wishing to make money and we don't know where the price will stop, when it will reverse, what is our risk. We don't know anything. We're just blindly entering the market. The second sin will be oversizing the position, meaning that we are placing our positions not based on a risk taken, but because of our wishes or certain way of thinking that this should be the size and we want to, and the most destructive will be when we are basing our position size only on the amount of money we want to win, and we are not thinking about the risk, we are not thinking about how much we can lose. The third sin, I left it at the end because I think it is the most important sin and most harmful, and maybe not even in the monetary way, in the destructive way for your wallet, but it's most harmful for our psychology, our brain, and probably our lives. This sin is called overtrading, which means that we feel and follow an urge of being constantly in the market, being all the time in the market. We try to catch every movement to make money, and we're sitting at our screens 16 hours a day trying to make money, wishing to make it. It is highly destructive because it leads to an addiction state of mind. This is really hard to eradicate in future, because when you become addicted, then you will just not see why you are sitting. You will just sit because you think you want to, and it's highly devastating. I was there, I fought it, and I know the way how to deal with it. But over trading is actually the most important and the most harmful sin which you can have. And believe me, the trading is not about being in the market. It's about not trading at all. Trading when you see your edge, when you see the proper market setup, and not just joining the market every time it moves. So we know our sins. I'm not a priest. I will not be judging you on this. All those sins I do maybe not have, but I fought. I had those sins in the past, and I found a way to avoid them. But why they are caused? How does it happen? And those are the obvious things. When you think logically and you're not at the screen and you're listening to this video, it seems logical. But why it is so hard to be so simple and to follow the rules? First of all, market is made to fuck us up. Really, market is meant in a certain way. We as traders, we as people, are to provide liquidity for the market, and you need to start thinking of yourself. If you are retail based, if you are a retailer, not an institutional player, you are just a liquidity provider, meaning that you are to provide fuel for the movements, for the big money, to make money on the market. Because of the Pareto principle, 80% of goods in the world are in the hands of 20%. Meaning that if we all traders, and I was in such discussions many times, if all of us just joined our forces and said, okay, we'll fuck the institutionals, market is moved by the amount of money, not the amount of participants. Meaning that even if we join our forces, we'll represent only 20% of the market. That's why I will say always that the market is made by institutionals, is made by bigger money, smart money, and you can't fight it. It's impossible. All this bullshit I'm hearing about us joining the forces to hunt whales and all this stuff about people saying that because I'm also deep in crypto scene, that Bitcoin will change the world, that it will rule the world, it will... Actually, Bitcoin is at least the total market capacity of Bitcoin. For the current price is less than 1/10 of assets available to only one bank, Deutsche Bank. It says something. We as just simple people, we can't fight the institutionals. It's impossible. Only way to make money is to see what they do and follow those movements. If you want to learn how to do it, you should probably look at the links below. I hardly suggest you start from my mentors and who helped me a lot in my journey to become a proficient trader. There is a course on technical analysis, understanding the market and how to make money on it. And I suggest you just check it out and see if it suits you. But other than that, I just want to discuss the psychological factors, why we are sinners, why we do repeat same things over and over again. Because market is made to fuck us up, because we need to provide liquidity. Somebody has to lose for others to win. It's based on basic emotions. Yes, we as human beings since caveman ages are creatures who made decisions based on emotions. The emotions are to preserve us, to help us survive in this world. When the caveman was fearing the dark, was fearing the dark bushes, his emotions were, by this fear, were telling him to avoid this darkness, because maybe a wild predator will try to hunt him, will try to kill him. So it was safer for him to fear and follow this fear. The greed is actually developed a little later, and it's also a kind of fear sometimes, because we fear of missing out the possibility of being wealthy. Greed builds up a little longer than fear, but it's powerful emotions which let us forget about what we risk and put on stake more than we would normally wish. And greed, greed is a count killer also. So those two emotions rule the market. Price moves up because more people are greedy than are fearful, and the opposite way. When the market dumps fast, it's because of the fear, because those people who see the market dumping feel they need to sell their assets, sell their goods, because they fear of losing more in the future. Which is, if you can analyze it, it's actually the opposite way of doing things, because normally when we go to a store, we want to buy something because something is cheaper than it was. We'll be hunting for discounts, and we will be trying, if you are selling something, you will try to sell it as expensive as somebody is willing to buy. So what causes us to do the opposite way? Actually, market is a really addictive environment. Not only it preys on our emotions, on our instincts, which are hard to eradicate, and don't even try to, or you're a psychopath, that you'll be an excellent trader. But I don't consider myself one, because because the way of doing things is not about forgetting about our human part, about our feelings, but being able to deal with them over time and to live with them and be able to make logical decisions and planned decisions no matter what our feelings are telling us to do. Because market is meant the opposite way the life is. So our emotions, even if they work in normal life, they will not work on the market. So you have to know that those sins are triggered by the environment which you can access from your home. You have all the charts available. You just need the internet connection. All the brokers are offering the access from internet. You don't have to set up an account with broker. You just need to provide your data for KYC and AML procedures. And that's actually the easiest way to lose money. You don't need to go to a casino to lose money. You can just enter the market. You can just play on the market. It's highly frustrating when we see ourselves following this way. But there are certain ways to fight it. And although it's really hard to do without any help and without any proper guidance, there are rules which, when you start following, will bring you closer to be able to fight the urge of being in the market. Or you will stop oversizing your position and will accept that greed is not the way to follow in traders' world, rather the being humble and accepting the risk. When you will know that even if the market is moving, you will try not to join the leaving train from the station. You will just wait for it to stop on the next one and then make your decisions. How to do it, actually? First of all is having an edge, having a strategy set up. It can be a simple one, strategy, really simple to follow. And in my experience, more simple the strategy, more profitable it will be. Because if something is simple, we don't need to think a lot about it. We will just execute it automatically, like we do with our emotions. So simple strategy will just give you the state of mind when you stop thinking and start just acting based on the strategy. Also following a plan. Whenever you want to enter a trade, remember that market is made to fuck you up. It will move like it wants to get you out of the position, and you will not know when it does it. So having a plan actually is the best way of avoiding all those traps, because whenever you will sit and write down everything you want to do with the current price action, you will write down your stop loss, which is your risk. You will write down everything about the take profit. You will write down your plan, what if the price moves against you, when you will exit, when you will enter, when you will have all the details about it, and you will know your risk to reward ratio, and you can also plan your position size based on the risk taken. When you write everything down, then only thing you need to do is, whenever the market enters the level you want to enter, is just follow your plan blindly. Because when you made a plan, you were emotionally indifferent towards market. You were not thinking emotionally, you were thinking logically. Many of you are excellent analysts, are excellent. I know people who spot a lot more things on the market than I do, but they are still losing money and I'm not. This happens because those people are excellent analysts, but are easy triggered by an emotional state and will make decisions based on emotions which are not logical, which are not making them money. So to avoid it, believe me, just a piece of paper and write down everything you want to do with the market. Then whenever the market enters the conditions, just look at this piece of paper and just do everything you've written down. I guarantee you that you will increase your hit ratio and you will start trading more in a relaxed manner, less stressful, and probably more profitable. Also, the good thing to do is having certain risk management rules in place. The easiest one is to follow 2% rule. I mean, your stop loss should be 2% of your wallet size. So whenever you enter a position, you should base your position size on this distance between your entry and stop loss, and guaranteeing that if the price moves against you this much, you will lose only the most 2% of your wallet. If you don't accept so much risk, you can lower it down to 1%, 0.5%. Believe me, better to enter lower position size than be fucked hard without knowing when it came. So setting up risk management will save you a lot. Right now I'm running a mentoring program for traders who already know the trading rules, who already know technical analysis, but still struggle with themselves. And I found that some of them have excellent feel of market. They have strike ratio sometimes exceeding 65%, but they are still losing money. And this is only because they didn't follow the proper risk management rules and didn't plan the trade properly, didn't find a good risk to reward setups. And they can even win 65% of trades, but what it matters when the average win to lose ratio, risk to reward ratio is less than 1. It's really, sometimes it's less than half. It's impossible. So having a good edge, good risk management rules, and trading with a plan will help you avoid all of this. Also, one more thing, because I'm running a community of traders and I know people talk a lot about market, and from my experience, everybody has a different approach to the market and knows and sees it in a different way. So listening to others talking about the market, what it can do, is one of the ways to destroy your account really fast. Because then you stop trusting yourself and you're entrusting other people and with your own money. Actually, they are making a decision, but they are not risking their money. You are risking your money because of their decisions. Also, it's comfortable for you because when the market goes against you, you can blame them for it, not yourself. But it's only your fault because you started listening to them instead of listening to you, your edge, and your experience. And believe me, if you know the technical analysis enough and you follow the Eric's Crown program, you will know enough to make money on the market. So if you follow simple edges coming from and strategies which you may build, or if you didn't build them, you can contact me and I will help you do one. Do easy strategy which you can follow easily and almost blindly. So if you know all those things, you are able to make money on your own. You don't need to listen to other people, because what other people say, it's pretty often not consistent with what they do. And listening to others around you is a really fast way of losing money, being frustrated, and also it takes from you the responsibility for your mistakes. But this is the bad way of doing things. As a trader, you need to accept the risk, you need to accept the responsibility for your decisions, because this is the stupidest way to entrust your money to the others. You really don't know. Many of you may listen to people on Discord, on Twitter, on YouTube, how to make decisions, on the market analysis, where to enter. And this is actually just stupidity, because you are entrusting your money, your earnings, your future to the others you don't really know. You didn't talk with them, you don't know who they are, what their background is. That's why I'm not posting too much market analysis. I'm not talking about what I'm doing as a trader. I'm not posting my trades because I'm seeing the market differently. I do things different than my mentor Eric or my fellow traders from my Discord channel. And I don't want to influence people and influence their decisions, and probably in a good way, because some of the things I do which make me money, if they copy them, not 100%, they will lose. So the safest way actually to trade is just to trust yourself. To trust yourself, you need to gain self-confidence, and gaining self-confidence is a long process. But when you finally can look in the mirror and say, yeah, I trust you the most, because remember, you will be the only person you can trust, and you will be the only person who will stay with you till the end of the life. So it gives you something to think. To trust yourself, the best way is to start journaling your trades, every trade. I'm not talking only about trades which you took, but also at trades which you didn't take, and noting every mental condition, noting what did you feel, how did it happen that you didn't take a profitable trade. It will give you not only simple statistics about your edge and about what you actually can achieve in the market, but will give you a deep insight in your thoughts and your feelings, and next time probably you will know when to listen your emotions and where not. Sometimes they may be telling you the truth. Sometimes they may lie to you because they will say you something which is different from what you should do. And the last thing, when you gain self-confidence, and I can help you with it in my mentoring program, there is only one last thing. When you have an edge, when you have a self-confidence, when you mastered your risk management rules, when you already know everything, just follow your fucking edge. Just follow your strategy. Just do it no matter what. Because we are not fighting for one trade, for one battle. As a trader, you want to win a war in general. You want to run a marathon. You want to be a consistent winner, but over time, and over time doesn't mean 5 minutes, 1 day, or 1 month. It means years. I'm trading for living. Almost every money I make is by trading. This is my main source of income. And only way I can do it, I can win constantly over time. I need to build my capital, I need to build my savings, and I have to manage them differently. than working as somebody's employee. So one more time, if you have an edge, if you are already journaling your trades, if you know risk management rules, if you know technical or fundamental analysis, I like technical analysis, but you may use the other one, which is as efficient in my way of thinking, but you can use any way of trading, and if you back tested it and you know it's going to be alright, just don't listen to others, follow your fucking edge and make money, and stop crying when you lose money, and stop blaming others, because only person who are really in charge of your money is yourself. I hope this time you enjoyed this video, and if you seek for a good way of managing your emotions, of learning how to trade, you can check the links below the video. There's a lot of free stuff. My community is free to join. You can freely just join the Discord, talk with other traders. I have also my set of indicators which you can use, which provides simple visual adaptation of the market structure. I'm also doing a mentoring program. There is also a really nice content released by my mentor Eric, who is also my friend, who does a lot of content for free, so you can check his YouTube channel down below. And I hope this video, I know it may be a little harsh, it may be a little straight, but I think it will give you something to think about if you want to become a proficient trader, if you want to make money from the market. It was really a pleasure talking to you, and I hope we will see each other in the next episode of Coffee with Jackie. So take care and trade safe.